Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market review for this Thursday, August 3rd, 2017, just after 3:20 p.m. Central Daylight Time. These are where the markets are going to settle in the stock indices. So you're looking right now as to where they're going to finish up. Remember, at 3:15 they pause. They reopen at 3:30 for more trading, but the settlement price in the NASDAQ, the Dow, the S&P, it's all determined right at that time frame. And what's interesting is late in the day we saw that Mr. Mueller, the special prosecutor, impaneled the grand jury, and they're going to hear now what's going to happen and get more information on his investigation of Russia, and was there any collusion between Russia and the Trump campaign, and did Russia interfere with the election, what's the impact? So it's going now on to where it should be, another level. And you will hear probably the news say, oh boy, this is big events, this is the news of the day. Impaneling a grand jury is a normal course of events. When you have this prosecutor, a prosecutor, president, that information to get more information. And I think you'll hear the Trump campaign say this is just part of the normal part of things. Gold tried to rally off that information when it came out, got up to 1277, came right back, and the settlement's going to be about there. The dollar fell for a moment down to a new low of 92.55 and bounced off of that. You're back over 119 in the euro, as you can see. Now, if there was really bad news, you got to ask yourself, what would happen? Well, you'd probably get a stock market sell-off. Bonds and notes would likely rally. They did anyways. Gold ideally would be higher, but, you know, gold hasn't paid attention to an awful lot from what's going on. So we'll see where that takes us. As a side note, the energy markets are still down. As I said, I thought that hedging was coming in there, and we'll see if I'm right or wrong if you watch the morning reviews and everything I do. In the NASDAQ, well, we're finishing up on that. You've been as high as 59.1875 on a closing basis. You've backed off maybe 30 points. It's certainly not a big break. You're still in the overall upthrust of the market. You can see the sideways action, and tomorrow will probably do a lot in helping us see if we can break out of this sideways action one way or the other. If you'll notice, you had an outside day up on Wednesday. Today you're having an inside day. If you take out 58, yesterday's low, which was specifically 58.56 and a quarter, that would be a sign of bearishness, because you would then take out the low of an outside day up, and I'd call that a bull trap. So that's one potential I'm looking at. The swing lines are up. They've got higher lows. They got higher highs. They're bullish. The market is right at the 18-day average of closes. So if you were to get under 58.56, you could end up with lower highs, lower lows. The swing line could easily turn down, but a lot's going to depend on the close tomorrow. I'm telling you, it's going to be an interesting day. Let's assume the market breaks down off the data tomorrow morning from the non-farm payroll. Potential could be 57.60s, the lower Bollinger Band. Let's assume the market doesn't break down and goes up near the 6,000 level. That's 59.9775. It's probably going to fall a little bit tonight. So in that 59.97, whatever it's going to be, right in that general zone. In the slow stochastics, momentum is still pointing down in this market. So you have an interesting market that's got divergence. You have the swing line up because prices tonight closed over the 18-day average. You also have upside bias, and momentum is pointing down. When we come to the S&P, an important event today, you have lost for the day the embedded reading. Now, if we go to yesterday's action, you were just barely hanging there, and I think I said, I think tonight you're going to have to take a good look at how you reopen, and the market has lost that embedded reading, and it's settled near the high of the day. Now, in order to get it back, you have to have a strong up day tomorrow. You could get it, I think you realize, off the non-farm payroll. at the other hand, if you take out 2463, be very careful. You're going to be under the 18-day average. The swing line's down and momentum's pointing down. You can go into a bit of a dive in that market. At least the bears will grab control of it very quickly. The Dow is in a different world. It's got the embedded reading, which is a powerhouse. It's riding the upper Bollinger Band, and with this pullback today to 21,975, it had 3 days in a row of closing over the upper Bollinger Band. It's now pulled back. You can see how that band is like a magnet. It's very, very important to learn how to use it in trading. Let's assume this market has a bad report tomorrow from the non-farms payroll. Well, I don't know if you're going to drop 300 points, but that's the first support. Let's assume it's a bullish report and you keep everything going. No reason you can't just keep riding that band. So that's how I'm looking at that. In the Russell, you're right now under the lower Bollinger Band, oversold as can be, bearish bias. This has been a downtrend, but between that Bollinger Band and the 100-day average, I'm looking for support to show. In the VIX, you've been riding the lower band. You even hit it again today. So it's what, 5 days in a row? You just keep hitting it, looking for a direction. I don't know what to tell you with it. In the bond market, you went right on up to the upper Bollinger Band and stopped. You got through it by 4 points and bang, you're right back on top of it. Trend up, overbought, into resistance. 10-year notes, trend up, swing line higher highs, higher low, trying to hit the upper Bollinger Band. You missed it by 2 ticks. That's nothing, and you are overbought. So going into the non-farms payroll, the market has taken a position that says it's going to be a weak report. The Fed's going to have a problem raising interest rates, and that hurts the dollar. That's how I'm starting to read. That's how the market's at least posturing tonight. And why do I say that? Lower highs, lower lows, the lowest low of the year. You're knocking on the door of it. You made it yesterday, embedded reading. I'm not saying you can't get a big reversal out of these markets. Anything can happen, and tomorrow's report's important. In the SEP euro currency, embedded reading bullish. Higher lows, higher highs, hits the upper Bollinger Band, backs away, hits it, backs away. Just a bull market, and that's how I'm reading that one. In the Aussie, I am looking for price and the 18-day average to hit each other now, not weeks from now. Now, why? Momentum is turned down. The swing line is now turned down. So when you lose an embedded reading and you get that turning down, often prices make a run to the 18-day average. Doesn't mean I'm right, but if you go back and you do your work on it, you're going to find how often it happens. Here you did it too. Did you exactly hit it? No. It came back up. So the word often is what you want to use. It's not every time, but it gives you a pretty good idea. In this case, you didn't hit the 18, but you did hit the closest of the main moving averages, the 100. So I have certain rules, and if you take my charting course, you learn how those work. And that was exactly what I was looking for. In this case, I'm looking for the 18 for the reason I just gave you. It's the closest of the main moving averages. You're still bullish as can be in the yen. So people are saying it's a safe haven. They're still buying the yen. Remember, this is not a currency that they're looking to raise interest rates on for years to come. They're buying it for other reasons. They don't want to be in the dollar, and they see good trade out of that. And you are losing the embedded reading tonight in the WTI. So because you're on the 18-day averages, you're losing it. That can't be an objective. The next objective could be back at around 47.5 to wherever that number's at as the market pulls back. But that's a weak sign, not a strong sign. Same thing has happened in the gasoline. Look at how the market's breaking down. I won't be surprised if price and the 18-day average want to make a run at each other there. And in the nat gas, you're oversold in a downtrend, just moving away, bounce off the Bollinger Band, and still very bearish. So those are the ways I'm reading it. I've written my gold report. It's already in the hands of my subscribers, so I'm going to start releasing it for the general public now. And you will get it from me. I'm going to guess you'll be getting this from me anytime if you're on my list over tonight, tomorrow. That'll be about it. To be sure you're on the list, you might want to go sign up again. And as for my gold report, it is free. You can give us a call. We'll be sure you get it. You can click up here. If you're watching me on YouTube, it says basically an icon. It'll come up with the form. You'll see the gold report on that, or underneath us on many websites. You can do it there too. I'm Ira Epstein. Just click on, by the way, if you said it says click here for Ira's free offers, and away you go. I'm Ira. You have a good day, and I'll see you all tomorrow.